I think so much of investing too is your personality, right? And so it's kind of funny how not just with people, but with stocks, some stocks you just get along with well, and some stocks you do not get along, or they don't get along with you.
You are listening to Right of the Chart, the podcast for self-guided, independent traders. Hey everybody, thanks for joining the podcast today. I am Sean Vincent. I am the voice of Right of the Chart. Adam Sarhan is the brains behind Right of the Chart. He'll be joining us in spirit again today. We'll be talking to Mark Fishman. He's a friend of the show and also a student of Adam Sarhan's A.M.P.D trading strategy. That's A.M.P.D. In our last conversation that I published last week, we talked a little bit about the difference between a buy and hold trading strategy, a more traditional trading strategy, and an active trading strategy like A.M.P.D. It's different mindsets, and it requires a different approach to looking at the stock market. Mark says something I love here about how different stocks have different personalities, and you just get on better with some stocks than with others, and that can inform how you trade it. We'll talk about that and more today. Here's my conversation with Mark Fishman. But before we get to all of that, remember that in the market, the past does not predict the future. No results are typical, and there is inherent risk when trading in the market. This podcast is for educational purposes and does not constitute financial advice.
I guess I'm trying not to be as stubborn sometimes short term, okay? At the same time, some of my biggest regrets are not being patient enough when I have a really good buy point and I did it right. And maybe I should have held the stock much longer than I did. I know that's a weird dichotomy, but I'll give you an example is Race, okay, Ferrari. When that came out as an IPO, what was that, 6 years ago? Whatever it was, I am not kidding you. I already told you a sad story about Facebook and me, if you remember. But this is another really, really sad story, is that I bought Race perfectly. I think I bought it at like $50 or $40 or something when it was IPO, way back. And it started to sink and it didn't act right. And I did get out and maybe I just didn't buy it again. But it's now at 472, right? So I don't even know what to say about that. Maybe in the short term, I made the right decision, but sometimes you forget about stocks and I never kept following it and got back in. So sometimes I have regrets about not being patient or not keeping track of stocks, even though I get shaken out to just, Mark, keep following that because you don't know, even in a year, it might be the time.
Well,
I don't know.
And let me comment on that too, because the buy and hold side of you, right, and the manager of your personal buy and hold portfolio looks at that and says, what a missed opportunity, right? But the amped trader in you, right, the short midterm trader knows intellectually that those protective stops that got triggered, that popped you out of there, that was designed from keeping you from losing more than you were willing to. And it's just that the risk is mitigated differently through your amped portfolio than it is for your buy and hold portfolio. And I think what a lot of investors struggle with in making it work is making that transition, right, between the buy and hold mentality and the stop out. So I think I would just from what you told me and going back to like Charlie Munger's comment, that when he played Contract Bridge, the card game, that even if he lost the hand, if he knew he played the hand correctly, the way it would be winning most of the time, he feels okay with it, right? And so you play the hand right for amped in your amped style portfolio, and even though time had proven that if you'd held on to it, you would have done better, it could have just as easily failed, and then you would have lost way more. And more importantly, is you would have violated, if you give one equity a pass in your AMP portfolio, you violate the risk mitigation for the entire portfolio, right?
Yes, I agree. It's, as I get older, I might talk a certain way, but I can't watch a large position lose 20%. I just can't. 10%.
But
It's too much. I just
yeah.
don't do that. So yeah, I guess I have regrets as a human being. Like, gosh, if I only stayed in, whatever. It's kind of like Annie Duke, that poker player. You're talking about games. I
Mm-hmm.
remember in her book, she said, you could make a good decision and have a bad result. That's okay versus making a bad decision, getting a good result, and then repeating that, right? Because you're going to get burned at some point, right?
Back to self-corrective behaviors as
Right,
important in the market.
right. And so I think it kind of shows me, and if I'm going on a tangent, let me know, but it shows me really how hard it is sometimes to find. There's only so many amazing stocks over time, I think. um, Adams is in Nvidia, and he stayed with Nvidia because he has such a large profit margin. It's kind of like me and Microsoft. I can absorb that at this point. I guess I would love to have more of these Microsoft and early entry Microsoft and Nvidias, but at the same time you do have to play the short game. And you I just, at my age, I can't lose that much. My horizon's shorter than a 25-year-old, right? I'm not going to risk as much. I'd rather get out and miss something, as just like you, than
Yeah.
like go against the AMPS rules and just lose. You just can't afford to do that.
At first, the protective stops are there to protect you from losing more money than you're willing to in a certain position.
Hmm.
But then some of what you're talking about there gets into the conundrum of, okay, now that we have profit locked in, how much are we willing to give back, right?
Right.
And so and a lot of that has to do with an overall judgment of market conditions. And when it comes to celebrating your mistakes because you learn from them, or maybe not so much mistake, I in July misread the market conditions as they turned out to be. I thought that that correction would be deeper,
Hmm.
and I had a lot of things that I had relatively new positions in, and I thought that if they went much below the 21-day moving average altogether, that they were likely going to go all the way down to the 50, right? And I thought if they broke the 50, we're on our way to the 200. And
Hmm.
some of them hit the 50, but they found support there. I'm talking about in large, not everyone acted exactly the same. And even the things that broke the 50, like the QQQ or anything, they recovered pretty quickly. And of course, if I had known that, I had room, I had enough profit where I could have absorbed bigger losses, and I wouldn't have to go through this whole exercise of now immediately trying to get back into positions so that things don't take off without me. Um, some of that's just if I hadn't already been shaking out a little bit a couple months before with the April turmoil that we had,
Hmm.
I'd have had more mature positions and gone into it from a different perspective. But the important thing is, all said and done, I didn't lose any capital during the correction. I gave up some profits during the correction, but I also locked a lot of things in, and now I'm in this rebuilding phase, right?
Me.
But
Yeah. Yeah.
I'm not. Yeah, it's so easy to look back and say, oh, well, if I'd done this and this, I'd have weathered it better. But we can just never know. Like it could very well have been a much deeper correction,
Yeah.
and I would have been then I would have been like, oh, I made great choices, like
Yeah.
I'm so glad.
I was in a similar position though, because in my active account, not the one we talked about that just kind of sits there, is
Yeah.
I also ended up, when things started going down and it was time to get defensive. As I told you, I started layering and starting to sell things. Is I ended up selling a lot of that portfolio. I wish I had profit, but I wasn't going to risk losing profit. Or if let's say I bought a stock the day before and the market started to sink, you just have to wait for another day. It's really hard, right? And another day might be a year, it could be 6 months. It's hard to be patient. But I did the same as you, and I've been building up. I'm pretty, much more heavily invested right now. Matter of fact, as Adam said, today, and I think yesterday, Nvidia made a move, and and I actually was shaken out of Nvidia at some point, just like you. I would love
Yeah, I'm
to have.
out. Yeah.
I've been in and out of Nvidia a few times, not as much as Palantir, which is a very challenging stock to stay in.
Yeah,
But
yeah, I'm
that's
done.
that's
I'm
my
done.
point. That's what I remembered. So I think, you know, I think so much of investing too is your personality, right? And so
Yeah,
it's kind of funny how not just with people, but with stocks, some stocks you just get along with well, and some stocks you do not get along, or they don't get along with you. And like, Microsoft, just as an example, or, it's a pretty easy stock for me to get along with. I can kind of read the charts better. It doesn't do anything too crazy. If anything, it tests your patience because when you think, okay, Microsoft, everything's up, let's go, sometimes it doesn't go up. But year in, year out, I think I did an AI search on chat, and I think Microsoft has averaged annually something like 29% a year over the last decade and has never lost more than X amount, not that, nothing crazy. And so it does give you good returns. I'm just giving you an example of kind of a longer term thing. And
yeah,
if you look at, you know, a stock like Race or Costco, those can't, sometimes it's easy to see and you need more patience. But like Palantir and NVIDIA, um, SMCI, they are so volatile. Um, that I can't, it's hard for me to stay in those things even super long term. Like when I get my profits and sometimes I take it with those because it's, I don't know, for me it's I
sure.
keep
You
those
crank the
savings.
stop up real tight at a certain point because you know if it when it pulls back, it's going to pull back deeply, and you're just not willing to give all that up,
I mean,
right?
you could lose SMCI could lose 10% in one day, and it's very hard for me.
And
That
then sometimes gain it all back the next day.
Yeah, and then you're like, oh, I should have kept it. And so maybe what I've learned is like I don't need additional rules. Maybe I just need to stay away from stocks that I just are that volatile. For me at my
Well,
age, maybe when I'm
well,
22, who cares?
yeah, no, I really loved what you said though. That like some stocks, like I don't know, you can almost be friends with them. Like they
Right,
match your
right,
style. And
right,
then I think if you're honest with yourself, so this is the main point that you made. Like if you're honest with yourself about the behavior, because when we look at a stock chart, what we're looking at is the behavior of that stock, right?
right,
Yeah, if I see a stock that has a nice advanced entry point and it has a shape that I like, and I can get in with a stop that is below some level of support and is comfortable with me, then you think I'd go for it. But then I look back on the chart and like, wow, look, it had some big volatility here and there, and I know that if that happens in the future, I'm going to get stopped out before it's mature. And if I just don't have anything, if I have capital that's ready to be invested and I don't have anything else going, I might go for that spot. But uh, I'd much rather find some other stock that's got a nice, uh, slowly upward moving flag that's respecting the 21-day moving average that has a chance it might break out again. Uh, and I'll feel better about that. Those are more like the stocks that are friends to me. I have
right,
much better because they match my style and my fears and my hopes and my risk tolerance, and
right,
I've become comfortable with them until they prove me wrong. But yeah, I think it's huge because what somebody could say, well, here's a great entry point. Nvidia is at as of today, September 25th, 2024. Nvidia is uh, testing resistance at its downward trend line over recent lower highs. And if it pops up above that, then I think there's a nice advanced entry point there if you have the risk tolerance for it. I'd rather see it break above a recent high uh, personally. And it's got a lot of room to grow there. There's a lot of time to get on that train, depending on where you think support is, right? So that's all.
right.
But right now, it's not my favorite. It's not. It's not behaving the way I want it to yet, and I've got other opportunities that fit my. But it doesn't mean that's not right for somebody else. It's all about
Right.
what that style is. All right, everybody. Thanks for listening through to the end. That's our podcast. It's been a crazy week for me. We had a hurricane here, if you hadn't heard. A lot of folks reached out to make sure we are safe and sound. We are. I appreciate your thoughts. I'm thinking about some friends of ours who did not fare as well, suffered some damage, and they're in our thoughts and prayers. We'll be back next week watching the market. We'll talk about it here. Until then, keep your losses small. Let your winners fly.
because you're going to get burned at some point.